Hello everyone. So today we are going to solve one question from job order costing system. Problem 1. Allenton Company is a manufacturing firm that uses job order costing system. So this company uses job order costing system. The company applies overhead to jobs using a predetermined overhead rate based on the machine hours. So last class I told you that for the manufacturing overhead cost, okay, for the actual manufacturing overhead cost, we cannot wait until the end of the year. So what we can do, we can estimate a predetermined manufacturing overhead rate just before start the production. So this information are given here that the company applies overhead to jobs using a predetermined overhead rate based on the machine hours. Okay, so we are going to calculate the rate based on the machine hours. And at the beginning of this year, the company estimated that it would work 31,000 machine hours. So 31,000 machine hours, this information is called the level of activity, you know that. Level of activity. And level of activity means this is our X variable. This is our X variable. So level of activity is the X variable, it is given. Level of activity is given. And incur to $48,000 in manufacturing overhead cost. So manufacturing overhead cost, it is not mentioned fixed, it is not mentioned variable. It means that it is the total manufacturing cost. So this $48,000 is the total manufacturing overhead cost, because it is not mentioned about which portion is fixed, which portion is variable. So it means that the total manufacturing cost is to $48,000. So this is our Y equal A plus BX. A plus BX. So this is the Y equal A plus BX. So Y is the total cost. So Y is the total cost. Okay. So this Y is given. Y is given. So we have given X and we have given Y. And if you remember this formula, how to calculate the predetermined overhead rate, this is the formula. Okay, the formula is actually Y divided by X, because we know that Y equal A plus BX. So the formula is Y divided by X, right? So Y is the total cost, manufacturing cost. So it is given total to $48,000. So equal to $48,000 is the Y, and we have X is $31,000, not $31,000, 31,000 labor hours or machine hours, equal $8. So we find the predetermined overhead rate. Predetermined overhead rate is $8. So this is the brief calculation you have to do. Okay. So we calculate predetermined overhead rate anyway. Now requirement said that prepared the appropriate journal entry for each of the items below. Each of the items below A through J. So we have A through J transactions. Okay. Now for every transactions, we need to do appropriate journal entry. We need to do some appropriate journal entry. We have transactions from A to Z. Now you can assume that, this is important, you can assume that all the transactions with employees, customers, and suppliers were conducted in cash. So all transactions are related with cash. Last class, I told you that we may have some transactions related with cash. We may not have some transactions related with cash. So this question says that you are going to assume that all transactions, right? All transactions with employees, customers, and suppliers are conducted in cash. Clear? Now, let me solve this question. So first transactions, A, raw materials were purchased for $1,000 and paid cash, right? Because everything's are related with cash. So this company purchased raw materials. This company purchased raw materials and paid cash. So what is the journal? What is the journal for this? So last class I told you that raw materials is our asset. Okay, raw materials inventory is our asset. If we purchase it, it is going to increase. And if it is increased, it is debit. So raw material raw materials inventory. Raw materials inventory debit, because we purchase this. We purchase raw materials, or raw materials increase. And question said that all transactions are related with cash, so we paid cash credit. Cash credit 1. Now we have to write a narration that purchase raw materials inventory. Purchase raw materials inventory. So every transactions you should write the narration. Yes. So the first one is done. We purchase raw material, right? We purchase raw materials. We write the journal entry. Raw materials debit. Raw materials inventory debit, and we pay cash credit. Now number B said that raw materials were requisitions for use in production. That means raw materials is going to use in the production. We buy raw material, our raw material increase. Now we are going to use this raw material in the production. Okay, we are going to use our raw materials in the production. Total raw materials we used this amount. Total raw materials is $409,000. Okay, this is the total amount. However, this amount include $388,000 direct materials, $388,000 direct materials, and $21,000 indirect materials. And if you remember last class, I told you that direct materials used in production means direct materials transferred to working process, right? And indirect materials used in production, it means that indirect materials transferred to manufacturing overhead. So let's do the second journal. So we are going to separate it. We are going to separate direct materials. Okay, we are going to separate direct materials, and we are going to separate indirect materials. Now we know that direct materials goes to work in process. So work in process is also our asset, right? Work in process inventory. Work in process inventory debit. And before, you can see that before you record raw materials inventory debit. Why you record raw materials inventory debit? Because our raw material increase. Now when you use it, okay, when you use it, your raw materials will decrease, right? Now look, raw materials inventory credit. Credit means we use $388,000 of raw materials. Okay, we use 388,000 raw materials in the production. And as it is direct materials, we record work in process inventory debit. So what is the narration? The narration is direct materials. This is the narration. Direct materials used in the production. Direct materials used in the production. So we record working process inventory debit and raw materials inventory credit. So now second part, we also have indirect materials, right? And we also used indirect materials in the production department, right? But if you write the same journal here, it is your mistake, because we know that we transferred indirect materials to manufacturing overhead account. So the journal is manufacturing overhead account debit. Manufacturing overhead account debit, and it is indirect materials. Indirect materials used in the production. And how much indirect materials? $21,000. So try to understand journal A and B. So A, we purchase raw materials, right? We purchase raw materials or raw materials inventory debit. Now, when we use these raw materials, our raw materials is going to decrease, it is credit. Now we have two types of raw materials, direct materials and indirect materials. Direct materials transfer to work in process and indirect material transfer to manufacturing overhead. Any question? Number C. Number C said that the following employees' cost were incurred. We have direct labor, we have indirect labor, and we have administrative salaries. So three types of cost already incurred, and the company, according to this question, they already paid cash, right? Already paid cash. So direct materials, direct labor means direct salaries, right? Indirect labor means indirect salaries. And we have office and admin salaries. So we have three types of salaries here. So these salaries were incurred and paid in cash according to this question. So for the direct labor, what is the journal for direct labor? So similar as direct materials, direct labor also transferred to working process inventory. So the same journal here, you can see. So as it is direct labor, so working process inventory debit, and this salary, direct labor salary is already paid in cash, so cash credit. $145,000 direct labor salaries transferred to working process and paid in cash. Okay, so the narration is direct labor cost incurred. Is the narration. Now we have indirect labor cost. We have indirect labor cost. Now this is the journal entry. So indirect labor transfer to manufacturing overhead. So manufacturing overhead debit. Manufacturing overhead debit, right? Direct labor transfer to working process, indirect labor transfer to manufacturing overhead. So manufacturing overhead debit, cash. Question said that it is already paid in cash, so cash credit. So indirect labor cost incurred. And how much indirect labor cost? $61,000. $61,000 indirect labor cost incurred. So indirect labor cost done. Now administrative salaries. So as it is administrative salaries, that means it is not related with factory, right? If it is related with factory, then either manufacturing overhead or work in process, right? Because it is related with factory. So direct part goes to the working process of factory, and another factory's cost goes to the manufacturing overhead. Those are the indirect. But here we have another term called salary, administrative salary. So this is called periodic. You know that administrative salary is not related with factory. It is related with periodic. This is related with periodic cost, right? So what is the journal? Journal is salaries expense debit. Salaries expense debit. So the question said that all expenses are paid in cash, cash credit. Okay. So the narration is administrative salaries cost incurred. And according to this question, it is $190,000. So try to understand number C again. Number C that said that they have three types of cost incurred: direct labor salaries, indirect labor salaries, okay, and administrative salaries. Direct labor salaries transferred to working process, indirect labor salaries transferred to manufacturing overhead, and administrative salaries is a periodic cost and it is expense. And the question said that all of these costs are paid in cash, so cash credit. Now number D, selling cost. Selling cost $148,000. Again, selling cost is the part of periodic, not the product cost, right? It is not the product cost, periodic cost. So what is the journal? What is the journal here? Okay, this kind of journal. Selling expense debit, selling expense debit, and cash credit. Narration, selling cost incurred. Okay, $148,000. So you can see that these journals are similar types because this is periodic, right? As it is periodic, it is not related to the working process. It is not related with manufacturing overhead. Now we have utilities cost, but it is not periodic. Why it is not periodic? This utilities cost is not periodic. Why? Because it is factory, right? So as it is factory, it should be related with either manufacturing or working process. Now, what do you think? This is manufacturing overhead or working process? This utilities manufacturing overhead, right? Because it is not direct, right? Yes. Okay, so manufacturing overhead debit. Manufacturing overhead debit. And this cost paid in cash. Okay, so cash credit. If this question is about something like this, if this question is about office utilities cost $12,000, what is the journal? No, not office expense. What is the journal if it is related with office? It is something like this. Yes. Utilities expense. If it is related with office, okay, then utilities expense debit, cash credit. Okay. Yes. So as it is factory, so we record manufacturing overhead debit and cash credit. Clear? Now, next one is about depreciation. So we have two types of depreciation here. So the depreciation expense for the year total was $221,000. So this is the total depreciation expense for this company, of which $114,000 related with factory building depreciation. Do you understand? Their total depreciation cost is $121,000, and from here $114,000 are related with factory building or equipment, and another $7,000 is related with selling and admin. Do you understand? Again, if it is factory, it is manufacturing overhead, right? Sorry, the journal here, manufacturing overhead. Manufacturing overhead debit $114,000. So what is credit? Can you remember? Is it cash? What should be the credit? Factory building depreciation, we record manufacturing overhead debit. What is credit? Accumulated depreciation. Very good. Accumulated depreciation credit. Because depreciation is a non-cash transactions, right? And narration is this is factory building depreciation. Now we have another depreciation. It is called office and admin. So this is again periodic. So as it is periodic, we no need to write anything about manufacturing overhead, right? So what is the journal here? Journal here is depreciation expense debit. So as it is not factory, we record depreciation. Depreciation expense debit, accumulated depreciation credit, and this is admin building depreciation. Office and admin building depreciation, it is $7,000. $7,000. So do you understand the difference between these two depreciation expense? One is factory and another is periodic. So we have different terms. Now number G is important because here we need predetermined overhead rate, because manufacturing overhead was applied to job. What does it mean? Manufacturing overhead was applied to job. What is the meaning of this sentence? The meaning is here. If you remember last class, direct materials and direct labor transfer to working process, right? And indirect materials, indirect labor, and other factory costs transfer to manufacturing overhead. then manufacturing overhead will transfer to WIP. So manufacturing overhead applied to job, okay? Manufacturing overhead applied to job means, it means that MOH transfer to WIP. You should understand that. This is called the flow of cost, okay? So now manufacturing overhead have everything. Manufacturing overhead include all indirect materials, all indirect labors, and all other factory cost. Now we are going to transfer this manufacturing overhead to WIP. But when we transfer it, you know that we cannot wait for the end of the month or end of the year, right? We cannot wait for a long time because we don't know what is the actual amount. We don't know what is the actual amount. That's why we use predetermined overhead rate. So when it is very important for this question, when manufacturing overhead transferred to job, okay, or when manufacturing overhead applied to WIP, it should be the estimated number. Okay, it should be the estimated number. So question said that the total manufacturing overhead manufacturing hours are $29,000, and we know the predetermined rate. We know that predetermined rate is $8. We already calculated. Predetermined overhead rate is $8. Okay. And this part is the estimated part. Estimated. We estimated a rate and we find that we use how many hours? We use 29 hours. We know this information. We know that we use 29 hours machine, right? And we estimate a rate for per hour. We estimate a rate for per hour, and we transfer this money from manufacturing overhead to work in process. So work in process now debit. Now work in process debit. So for this one, work in process debit and manufacturing overhead credit. Manufacturing overhead credit, and don't forget that this is the estimated amount. And at the end of the year, we have to adjust. Okay, we have to adjust whether this number, that means what is the number here? The number is $232,000. So $232,000. This is the number, and this number is an estimated number. Okay, this number, try to understand this number. This number is not the accurate one. Why not the accurate one? Because we don't know the future, right? Future may be higher of this money, or future may be lower of this money. Or if future it is equal, that means we have no mistake. You understand? If future this amount is equal with actual, okay, then we have no mistake. But future may be higher or future may be lower. So this is the narration, manufacturing overhead applied to job. This is the narration. Manufacturing overhead applied to job. And you should remember that in the question will tell you manufacturing overhead applied to job. You should understand that the meaning is manufacturing overhead transferred to work in process. Okay, manufacturing overhead transferred to working process. And when we transfer manufacturing overhead to working process, we should find estimated number, because we cannot wait for this number until the end of the year. So that's why we estimated number. Okay, then what is the meaning of cost of goods manufactured? Can you remember? What is the meaning of cost of goods manufactured? So what is the another name of cost of goods manufactured? It is called the product cost, right? Another name is product cost. It means that it is direct material plus direct labor. Okay, so direct materials and direct labor already transferred to WIP, right? Now we also transfer MOH. we also transfer MOS to the WIP, right? Now WIP include everything. Cost of goods manufactured means WIP include direct materials, WIP include direct labor, and WIP include manufacturing overhead. Why? Because we look at here. We credit manufacturing overhead and we transfer the money to where? Transfer the money to the working process. Now working process equal everything. So WIP equal. So cost of goods manufactured means the total amount of WIP is include direct material, direct labor, and manufacturing overhead. And this one, if you remember the follow-up cost, if you remember this follow-up cost, now this WIP transfer to where? If you remember the follow-up cost, so this WIP now transfer. Can you remember? Transfer to where? Finished goods. Very good. Finished goods. So cost of goods manufactured means this is the meaning of cost of goods manufactured. Cost of goods manufactured means WIP transferred to finished goods. This is the meaning of cost of goods manufactured. Now, if this is the case, what is the journal entry? Now, when we transfer WIP to finished goods will increase and WIP will decrease, right? So the journal is finished goods inventory debit, because finished goods is our asset, right? Finished goods inventory debit, this is the amount we transfer, debit, and now working process inventory credit. Now we don't have working process inventory, we transfer it to the finished goods. And this is the narration, cost of goods manufactured. We record cost of goods manufactured. Now all products are now belongs to finished goods, right? And what is the meaning of finished goods? When finished goods inventory debit, it means that it is 100% completed. Because everything or every working process transferred to where? Transferred to finished goods. So working process is the partially completed, right? When we transfer it to the finished goods, it means that it is 100% completed. Now, if finished goods is 100% completed, what is the next step? What will you do with your finished goods? Sell, yeah. So we should transfer it to the sales department. Very good. So we are going to transfer finished good to the sales department, and we have some information. The company sell total $1,107,000. So this is their sales revenue, because they say that they sell this amount, right? So this is called sales revenue. This is called sales revenue. So the sales revenue is $1,107,000. And if you remember last class, I told you that when we record sales revenue, we should immediately record our cost, right? So this is the revenue we receive from other people. We sell our product and other people give us this money, right? But we produce this product, right? To produce this product, this is our cost. This is our cost. So this item is called cost of goods sold. Cost of goods sold. Right? We sell our product, other people give me $1,107,000, but before selling, I produce this product, right? My production cost is $768,000. So we have two journal entries, one for sales revenue, another for cost of goods sold, right? So first journal is about sales revenue, and we know that revenue increase credit, right? Everyone knows that revenue increase credit. So sales revenue credit. So sales revenue credit, and this is credit. And the question said that every transactions are related with cash. It means that we receive cash from outsiders. So other people give us the cash. So this is the narration. Okay. Record sales revenue. We record our sales revenue. This is the first part, because I told you that this journal include two parts. First, we record sales revenue, then we record cost of goods sold. And cost of goods sold, you know that it is debit, our cost, right? Our cost is debit. So cost of goods sold debit. Cost of goods sold debit. And as we sell our inventory, right? We sell our product, we sell our inventory. So our ending in our finished goods inventory is going to decrease. You understand? Finished goods inventory debit. Why finished goods inventory debit? Because it is 100% completed and not yet sell, right? Not yet sell. So when you sell your inventory, when you sell inventory, so your finished goods inventory is going to decrease. So finished goods inventory decrease. And this was the cost of this finished goods. This was the cost of this finished goods. So these finished goods are no more with us, right? We sell it. So the journal is record cost of goods sold. So we almost done everything. If you remember, we transfer direct materials to working process, we transfer direct labor to working process, we transfer indirect materials, indirect labor, and other factory cost to manufacturing overhead, then manufacturing overhead transfer to WIP, right? WIP transfer to finished goods transfer to sales department, everything done. Now at the end of the year, I told you that we need one adjusting entry to check whether this number is accurate or not. Can you remember this number? We are going to check whether this number is accurate or not. Why? Because this number we estimated, right? Now that means this manufacturing overhead number, this one, this account, this is the account. This is the account, we estimate this number. Now we are going to prepare a T account. Okay. We are going to prepare a T account to see whether this number is accurate or not. Now you can see that from the very beginning, how many manufacturing overhead costs we have. Look, manufacturing overhead debit means this is the actual number. Okay, manufacturing overhead debit means this is the actual number. So we find that $21,000 debit. Okay, manufacturing overhead. I repeat again, manufacturing overhead debit means this is actual. So we find one manufacturing overhead debit. We find another manufacturing overhead debit, and this is actual. We find another manufacturing overhead here debit. This is actual. We find manufacturing overhead debit. It is actual. Now we can see that we find one manufacturing overhead credit. We find one manufacturing overhead credit, right? And credit means this is actual or estimated. This is estimated. So if you remember your principles of accounting 1, when we prepare T account, we have left side and right side, right? We have debit side and credit side. So debit side will go to the actual amounts, and credit side, because estimated amount is the credit one, right? And estimated amount will go to the credit side. So we are going to prepare a T account. So this is the T account. Okay. And we find that we find that one amount is credit. One amount is credit because we have debit side and we have credit side. Look. So I told you that debit side means it is the actual amount, right? Debit side I can write here. Debit mean actual. Debit means this is actual. And credit means estimated. Credit means estimated. Estimated. So we find that one item is credit. That means estimated amount. We estimate one time, right? We estimate one time and it is credit. It is credit. Now we have several debit. We have several debit. You can see that from the very beginning. $21,000 debit, right? $21,000 debit. I copy it. $21,000 debit. Then $61,000 debit. $61,000 debit, $12,000 debit. So debit item goes to the debit side, credit item goes to the credit side. You know this from your Principles of Accounting 1 course. Then $114,000 debit. Now we write debit item in the debit side, credit item in the credit side. Now we have to check. We have to check debit and credit equal or not. If debit and credit equal, it means that you do not have any mistake. Okay, you do not have any mistake. But when we add debit and credit, what is the total amount of debit here? Total amount of debit is $208,000, right? Total amount of debit is $208,000. So this is the total amount of debit. What is the total amount of credit? $232,000. $232,000 credit total. Now we find that debit and credit is not equal, right? So what does it mean? You record over cost or you record lower cost before. You estimate higher amount or you estimate lower amount. We estimate higher amount, right? Clear? Because our estimated number is, look at here, our estimated number is $232,000, but actually it is $208,000. So before we estimate higher amount. Now what should we do? Now we have to, if we deduct from here $24,000, if we deduct here $24,000 and add here $24,000, that means we deduct $24,000 from here. So if we deduct $24,000 from here, okay, now you can see that these two number equal. These two number equal. $208,000 $208,000. Do you understand? Do you understand this part? Because we find that credit side is higher, right? So we deduct $24,000. What is the meaning of deduct? Deduct means decrease. We have to decrease cost. We have to decrease COGS. Do you understand? We have to decrease cost of goods sold, right? And can you remember, if cost of goods sold increase, it is debit. If cost of goods sold decrease, it is credit, right? Now there in the adjusting entry, this is the adjusting entry, we should record now cost of goods sold credit. We should record now cost of goods sold credit. How much we have to deduct? $24,000 we have to deduct. Okay. We have to deduct $24,000 cost. From where? From manufacturing overhead, right? So manufacturing overhead. Manufacturing overhead debit. Manufacturing overhead debit $24,000. And the narration is close before you applied, okay, over amount. Before you applied over amount, now you close this. You close this over applied. If it is opposite, before you record lower amount, but actual is higher, what is the journal? Before you under applied, what is the meaning of under applied? Before you estimate lower amount, right? Now actual is higher. So what should you do? What is the journal? Yeah, cost of goods sold debit, okay, and manufacturing overhead credit, opposite. So this is the journal entry. This is for question 1. Okay, this is for question 1. Now I change the question 2. For example, I change this question. Okay, try to see. I change question 2. I change here. You can assume that all transactions with employees, customers, and suppliers were conducted on credit. On credit. Before everything was with cash, right? Now I change this question. I said that all transactions with suppliers, customers, employees are related with credit. What is the change? First change here. You buy raw materials. Okay. You buy raw materials or what is the meaning of on credit? What is the meaning of on credit? On credit means you not yet paid cash, right? So change is here on here. Buy raw materials debit, then accounts payable, accounts payable credit. Okay. Now where is another cash? This is another cash. Direct salary, direct labor salaries, indirect labor salaries, and administrative salaries on credit, right? On credit means not yet paid in cash. So what is the journal for first one? For direct labor, working process inventory debit, salaries payable credit, right? Then manufacturing overhead debit, salaries payable credit. Clear? Then salaries expense debit, salaries payable credit. So look at this three journal. Before it was working process inventory debit, cash credit, because salaries paid in cash, direct labor salaries paid in cash. Working then manufacturing overhead debit, cash credit, but now manufacturing overhead debit and salaries payable credit because not yet paid cash. Same. Clear? Selling expense incurred. Previously we paid cash credit. Now selling payable credit. Selling payable credit. Utilities expense. Now what is the journal here? Can you tell me? Factories utilities cost not yet paid cash. What is the journal? Manufacturing overhead debit. What is credit? What is credit? Utilities payable credit. Yes, utilities payable credit. Then another cash is here. We sell our goods, not yet receive cash. Okay. What is the debit here? What is the debit? Accounts payable or accounts receivable? Accounts receivable, because you will receive this money. Accounts receivable. Accounts receivable debit. Clear? So same question I solved based on cash, right? Same question I solved based on cash or based on credit. In the exam, I may prepare a question like this. Some transactions are related with cash and some transactions are related with credit. Okay, credit or anyway, we have another term called on credit, or we have another term called on account. So you learn it from your principles of accounting 1. On credit or on account. Okay, it means that cash not yet paid or cash not yet received. Okay. So in the exam, I may prepare a question. I can give you some transactions that are related with cash, some transactions that are not related with cash. So you have to read the question carefully to solve these journal entries. And in the exam question, you will have journal entries from here. Okay. Any question?